session, the next panel, again on a very unique subject, the future CRO, how to succeed in tomorrow's economy. And before I call on the panel members with a big round of applause, would like to highlight a few points of the discussion, how technology is changing the risk management, maximizing the use of technology like AI, RPA, and machine learning, building superior credit risk model for digital credit, and many more. So please help me welcome the honorable panel members with a big round of applause in the order of the sequence. Joining us first on stage is Mr. Sebastian Fernandez, CRO from HDFC Credilla. A big round of applause for Mr. Sebastian. Mr. Sebastian, welcome to the stage. Please take your seat. Joining next, we have Mr. Shriram Jagadeswaran, Chief Credit Officer from Shriram Housing Finance. A big round of applause for Shriramji. Shriramji, welcome to the panel. Please have your seat. Joining next, we have Manish Odeka, CRO from Hiranandani Financial Services. A big round of applause to Manishji. Manishji, welcome to the panel and please take your seat. Joining next, we have Mr. Ashwini Kumar, CRO, Tata Cleantech Capital. A big round of applause to Ashwini-ji. Ashwini-ji, welcome to the panel. Please take your seat. Joining next, ladies and gentlemen, we have Sundar Natarajan, CFIRM, Deputy Chair, West Region from IRM India Affiliate. A big round of applause to Sundar Natarajan-ji. Welcome to the panel. Please take your seat. Joining next, we have Mr. Srinivasaraghavan, CRO, Arman Financial Services. A big round of applause to Srinivasaraghavan-ji. Welcome to the panel. Please have your seat. So wishing the panel a fantastic session ahead. All over to you.
Good afternoon. The topic for discussion today is the future CRO, how they will succeed in tomorrow's economy. Now, before going into that details, I was also a speaker in the first panel, wherein we talked about AI and digital economy and all that stuff. And afterwards, another two panels were also there. We discussed a lot. There might be some overlapping happening. Please excuse us for that. When I got the subject future CRO, I myself was perplexed. In the sense, what to talk about, number one, whether machines will replace man was my second question. And this is a thought which is going on for quite some time now. And I was talking to Sebastian some time back in the speaker's room, wherein my spouse and also my daughter, both are AI specialists. They were saying, what you are going to talk as a CRO when we are going to take over. That is what they were telling me. Okay. Okay. Anyway, that is one thing which we need to look at. The second most important thing, friends, I do have a career spanning 40 years in the BFSI industry, 40. Okay. I have handled enough and more of all the departments. Not a single department I have not handled. I have been in the, I have worked in the biggest bank and also in the smallest entity. Now, we are talking about a future CRO. From the morning, the 3 sessions, we are talking about AI and the applications. And I am working in an Arman Financials where it is also fully digitalized, which I told in the morning. Now, if you really look at it, again, I was talking to the speakers here some time back. How many CROs, whether it is in bank or other companies for that matter, really know AI and ML? That is also a thought which is going on in my mind for quite some time. Probably I will be questioning these people on that. That's also required to be understood. Third and most important thing It is for the banks. I'm not sure whether it has been implemented for the NBFCs. Reserve Bank of India came out with a circular on the role of CRO recently, wherein they say that you should not be part of the credit appraisal. You should not be, I repeat the words, you should not be the part of the credit appraisal. You can be an advisor or you can give your comments, that's it. That is also another thing which we need to look at. So these are all some of the thoughts which is going on. When it goes by, I will be asking. And now I will request each one of you to introduce yourself before really going into the things. Ashwini, you start from yourself.
My name is Ashwini Kumar. I work as a CRO for Tata Cleantech Capital Limited. This is an NBFC catering primarily to lending requirement of infrastructure sector. Prior to that, I worked with various banks, including Bank of Baroda, HDFC Bank, and HSBC Bank, and worked in various roles, including corporate banking, project finance, retail lending, and some other division of the banks. So this is a brief profile of myself.
Thank you, Ashwini. Hi, good afternoon. My name is Manish Odeka, and I am putting it a very simple definition. I am a retail money lender who follows all fair practices codes. I am no more than a money lender. My career journey have been ICICI, Temasek, Fullerton, Reliance, and now Hiranandani Financial Services. We are a nascent 3-year-old baby. We started with pandemic, so I am double dose vaccinated on credit quality. Okay, I hopefully will give you a good time.
Thank you for the very interesting introduction. My name is Sundar Natarajan. I am representing Institute of Risk Management India. I'm the Deputy Chair and manage the West region pro bono. My day job is as a Chief Risk Officer with India First Life Insurance. Been in the insurance space for a couple of decades now, and in the BFSI sector for about 27 years.
Good.
Good afternoon, everyone. I am Shivram Jagadeswaran. I am the CRO for Shriram Housing Finance Company. We are into the secured loans, home loans and loan against property. Prior to that, I have had experience of over 20 years across various companies like ABN AMRO Bank, Citicorp Finance, Bajaj Finance, etc.
Thank you. Yeah, hi. Good afternoon, everyone. I'm Sebastian Fernandez, the Chief Risk Officer of HDFC Credilla Financial Services, which is a dedicated education loan provider. In fact, we are the largest education loan provider in the country. I was part of this founding team who joined about 16 years back, come with about 20 years experience. And before that, I worked in various industries. The last stint before this being in ICICI Bank in the retail assets compliance unit. Thank you.
Thank you, Sebastian. Now let me go to the questions. My first question would be to Mr. Sundar. Sundar, how technology is changing the risk management and your thoughts on future CRO? I'm asking it because you are the IRM chair. How you look at it as a future CRO and also how technology is changing.
Thank you. A very thought-provoking question. I'm sure you must have been hearing about credit risk management all day, so let me do a small detour. I'll use some examples around insurance. That's what I know best. But I'll try to start with something which all over here will appreciate. Everybody likes music. Yeah, everyone likes music. So the question is, has technology changed music? Right? If you were to look at a movie or a song recording from the 50s or the 40s, you would have a monotone and you would have a single cassette player or even the gramophone record and, with a pin and all of that. And then rapidly changing to what you have today, where we can play music. I don't know if any of you follow this gentleman called Raghavan. He plays his music on an iPad, and he creates magic out of it. I was a I was an R.D. Burman fan, in my school and college days, an R.D. Burman and Ilayaraja fan. And then I became an A.R. Rahman fan. Now, the big difference from, these folks is how technology changed music. Now, if anybody who ignored technology, lost out on the race, right? Or would lose out on the race. And that's how the world has evolved. Alvin Toffler clearly predicted a digital age, a long time back, 50, 60 years back, and we are past the digital age. We are going ahead. So risk management is no stranger. Risk management, it's probably nascent. We certainly need to go a long distance to inculcate into our DNA. So when I went to B school and then joined the BFSI sector, typically you were told that, you need to have credibility, you need to have capital, you need to have collateral, some basic metrics before you lend. Those will remain. Those certainly remain. If we were to look at CRO of the future and how technology has impacted it, it will impact it dramatically. And let me give you an example from the insurance space. How does a customer get onboarded and serviced? Typically, that is what we are all worried about, right? And how does the organization, how do all stakeholders benefit out of it? So when a customer is identified today, you use a CKYC or an EKYC to identify if that person is that person. And then you use some AI OCR, to ensure that, whatever is there in that document gets read digitally. Then you also look at propensity models, whether this person has a propensity to fraud, whether this person has got a propensity to stay invested, in life insurance, whether you pay premium or pay EMIs, in a loan over a long period of time, or the tenure, is what typically you look at. And, in the lending space, lo and behold, it is all converted into one single credit score, right? And in the insurance space also, we are moving towards that direction. You have an income predictor, you have an insurance score, and, even medical underwriting. Today, there is a lot of improvement in use of technology. I mean, the day is not far where, ABA is used to access medical records, and you have a medical score, like a CIBIL score, okay, which is used to do the prognosis of a person, and predict life and hence price. So in all of this, if technology has taken over all of this, then where does the risk move to? The risk is gradually moving to the front line. Okay, the risk is gradually moving to how it is embedded and enmeshed into the process. And it is moving to first line, in the classic 3 lines of defense. So what does the risk officer do? What does the CRO of the future do? So the CRO of the future would look at challenges with the process. The CRO of the future would look at strategic risks. And typically, what is risk? If we were to move away from, take the veneer of credit risk or insurance risk or mortality risk, from our eyes and, look at a much wider definition, anything which is an obstacle to achievement of the organizational vision and goals is a risk. And if we were to look, if the CRO were to be looking at that as a risk and creating a risk mitigation plan and, getting all his fellow CXOs to participate and look at goal setting with a risk lens, that would be the role of a CRO. And that is the emerging role of a CRO. One of the biggest movies of all time is Godfather. I'm sure you've heard. And in Godfather, there is only one guy who's who's an American. Okay, the others are all Italian. And that guy is, I don't know how they pronounce it, but he's the CRO. He's the guy who waves the red flag. So the CRO should wave the red flag, no matter what happens to technology.
Probably the red ribbons signify the red flags.
Okay. Shivram, I will ask you. We are talking about usage of digital technology. As a CRO, what are all the technologies you will be using and how will you be maximizing with that use of technologies?
Yeah, so interesting question. Use of technology and the benefits that we get in credit or risk. I think enormous. The reason being, say, lending always existed in the past. It existed 15 years back, but you can imagine the way the bureau have progressed over the last 15 years. Can you imagine lending today without a bureau score? You can't. That's what data automation, AI, ML has done to the kind of lending industry. There's enormous data available, but what we do with the data is important. So the human element cannot be kind of done away with. The human element will be the thought process, and what we do with the data and what we do with the technology will be the game changer. We have version 1, version 2, version 3 scores across bureau. It's all evolved. There's so much data available and it will keep evolving. So essentially I see the technologies of AI, ML, etc. delivering 4 key aspects. One is speed, one is scale, one is convenience, and one is coverage. So and these 4 things come together, it leads to superior delivery of any financial product to the end user who is the customer, and also to the financier who is the lender. I think we evolved. We are in a phase which is very, very interesting. We will grow, evolve from here, and I think it will be more geometric progression than linear progression that we had over the years. I'll give you one use case scenario where in Shriram Housing, we have developed a tool called as BET. It's called as the Bounce Estimator tool. So bouncing is a very important criteria or a day in any financial, the day the EMI hits the customer's account. So everyone waits with bated breath, what is my bounce rate on the 5th or 7th, whatever is the EMI due date. So what if you could predict it in advance? So we have developed a tool like that using AI and ML, which has helped us to predict the bounces. So this is just a use case scenario. Similarly, there are many such things that can be done. We are doing, especially on the secured space, when it comes to valuations. There is so much of data available. Lat long of any property that we have valued is available now. So if a property comes up for funding, if I know the lat long, I can give a ballpark estimate as to what the value is without going to that property. So enormous power in our hands. What we do, how we do it, all up to us. Very challenging times for us.
My next question is to Manish. Manish, as a CRO, how will you develop a credit risk model in a digitalized environment?
I'm still learning after 2 decades. So, genuinely, I feel credit risk modeling is never an endpoint destination. It is a journey. At best, what I can say to my stakeholders and investors, I have a model which is time-tested and gives me successful results meeting to my enterprise risk appetite statement, whatever is my appetite, and I can continually work upon it to make it much better. I don't think any risk manager would dare to say that he has a superior risk model. The counterparty risks are always ahead of the risk model we adopt. Let me take just a digress. He represents the insurance sector and he touched 2 very valid points. People would empathize with me, at least in the lending space. The industry has not adopted CKYC. Half of the entity's application form doesn't even have that data field. The other half doesn't have the data field on their loan management system. So from how will you build a good credit risk modeling? The prerequisite for a credit risk modeling is data source and data quality. And we are missing on those 2 things. Yes, things have changed over a period of time and it is only moving towards better data quality. Again, I will take a contrarian view as a member of the credit risk fraternity, in last 20 years, we have not made a second product other than credit bureau score. That is the only one invention we have done in last 20 years. And on a lighter note, now half of the entities have stopped using credit bureau score. Credit bureau scores, please apologize, but half of us have stopped using credit bureau scores because it gives false positives. We have done a deep dive into the data, and as Shivram said, we are reading now more on the data and not the output, because everybody has their own subjective need how to read that data. Now coming back on how to build a superior credit risk modeling, the end objective for any CRO is to stamp how much I am ready to lose my probability of default on an LGD and an EAD on a single contract. So that is the only objective of a lending entity, that I should know on the day of sanction what is my PD, LGD, EAD on this contract which I am sanctioning. To make the right estimate of these three numbers, I need obviously to do many things right. Starting from the board, I need to have a very robust policy and SOPs in place, followed by a robust review mechanism. See, everybody designs a very good strategy document, but when it comes to execution, it is always delegated to the last fellow and who has the most smallest Form 16. The challenge lies there. And it is not wrong, because in the fast-paced world, we all try to distribute our work, but somewhere the job between strategy and execution gives unwanted results. In simpler terms, I would say, and I can quote some of the examples or mistakes we have done in the past. You all will recollect sometime in 2014-15, Airtel office in Mumbai, their HQ had a fire. And Airtel was my primary link. As a BCP DRP, I had some other telecom player. I would not take a name, but they were my secondary link. Unfortunately, for that secondary link, the primary link was Airtel. So I failed there also. Though on paper, I had a BCP DRP, but in fact, both my primary link and secondary link failed. There are many such use cases where we miss on the execution. On paper strategy, we do right. But very simply, I would say, please avoid concentrations in any manner, in approvals, in geography, in product segment, anywhere. And CRO has to learn and stand and say no to many things. The most abused word now in our industry is we operate on a hybrid environment. Hybrid environment is nothing but non-clarity whether a binary works for me or not. So we take the easy use case. So we are hybrid. We do digital, we do physical. The problem is not with the hybrid, but the problem is when you build SOPs, your risk registers, your risk matrix. It is very difficult to put system controls on a hybrid environment. The objective for us as a risk manager is to maximize system controls each and every day and minimize the manual residual controls, which unless and until we are very clear in our mind what works on digital, what works on physical, what works on a hybrid, will be an incomplete task. Yeah.
Well said, Manish. Ashwini, as a CRO, how will you supplement to the Manish this thing? How you will leverage digitalization for better and faster decision making in credit?
Yeah. Nowadays, we have been talking about digitization and technology in all aspects of our life, including banking. And there has been rapid growth in this segment. Banking has also adopted digitization very rapidly, and risk management cannot remain untouched. So risk management is also trying to be in the race. Now, when we talk about digitization or technology, it provides us a great tool which is going to help us in decision making. It is credit decision making or any kind of decision making, because we deal with data and a huge amount of data is available in-house with many of the organizations, and for some newer organization you can rely on some external data. So huge amount of data is available. How do you want to leverage on the data? And that is being provided by with the help of technology. And this ultimately is going to help us in decision making quicker and better. Now, when we talk about decision making, this entire aspect of decision making, this is one aspect. Another aspect is that knowledge management. When we talk about knowledge management, how do you ensure that all your team members, employees across the organizations are well aware of all the practices, policies, systems, processes, and in that also technology is helping to a large extent, because you are able to disseminate information across the organization in a very fast manner, and you are able to communicate very effectively across the organization. So all these are there, and that is possible because of digitization and technology, use of technology. Now, when we talk about decision making, faster, relatively easier, faster decision making is possible, definitely possible, and we have been doing, all of us have been doing. But when we talk about better, now better is a very different word. Better decision making requires a lot of other things. It is not only digitization. How do you use that digital and technology platform? That becomes important. You need to take advantage. Everybody is at level playing field. Everybody can buy those softwares, technologies. So all are at the same level. But your competitive advantage will come from the fact, how do you leverage? How do you take benefit of all the ingredients which are available with us? For example, when you develop model, how do you create various thresholds to ensure type 1 error, type 2 error is at optimum level? Means you don't reject false case, in like correct cases which was not supposed to be done. At the same time, wrong cases should not get approved. So how do you minimize those things? So how do you develop threshold? While doing this, you also need to consider cost versus profitability. Now, if you are losing some business, that is opportunity cost for you. If you are doing everything, then there's a provisioning cost. So how do you make right balance? Again, so that's why use of all these platforms, all these technology becomes very important. How do you define all these things and take proper advantage of all the digitization? Then it can become a great tool, because it is a great ingredient available to you. How do you want to leverage on that? How do you want better food out of all these ingredients? When we are using technology, then another risk which comes to us is the information security risk. Now, all this, while in last 3-4 years, that risk has become very prominent, and that is becoming one of the major challenge for CRO also. Across the organization, now you must have heard about CISO, now Information Security Risk Officer. Every organization is taking great interest in developing right or creating right kind of framework, placing right kind of people in that role. So CRO is also responsible for information security risk management. Now information security risk management has become much, much bigger, because in credit risk what happens, one decision can become bad, okay, one account. In security risk, entire platform, entire system can be a danger. So when we use all this digital platform, we need to create systems, we need to develop that kind of awareness across the organization to ensure that this is used in the right way. We minimize all the risks which we are exposed to, because we can't choose not to use technology. We are using because there are great advantages of this, but this needs to be balanced with all other aspects of assessment also.
Thanks, Ashwini. Sebastian, I will go to my first question, which I was wanting to ask. Whether man will replace machine? Can the future CRO be a robot?
Okay. I know this is a very touchy, question, very touchy issue, for many of us in this room. This has been actually bothering a lot of people. I thought, maybe let me set a slight context here, which will help to quell the pessimism to some extent. I don't know whether I'll be able to do complete justice to that, but I'll make an attempt to, just quell that. So it goes like this, every 100 years or so, there are a number of jobs which suddenly go out of vogue and they're replaced by different jobs. And mostly this is brought in by, certain technologies. Just to give very simple examples to, the audience here, like say in the 19th, 20th century, we had, typists, which, suddenly became redundant once, the computer came into existence. Similarly, the iceman in the Western world, you had this iceman who used to come with this big box of ice, which would help you, keep your food, refrigerate your food. But all that was then, replaced with the introduction of the electric refrigerator. I mean, I can go on with examples like this. But what I believe is that artificial intelligence and robots is just one such technology which will, it will take away some jobs. Many experts believe that about 20 million manufacturing jobs will be lost to automation by the year 2030 to say about 2035. There are talks like that, even unskilled jobs, will be taken over by, robots and, by similar robotic RPAs and all. So like in this context, I just believe that, ultimately, these robots are nothing but just binary codes developed by human beings like you and me. I believe, yes, if they are introduced, there will be another 10 people, who will be monitoring this on an ongoing basis. So yes, machines will definitely take over some jobs, but there will be men also who will be needed to, run this and all. So I don't completely believe that, yes, in the current construct machines will completely replace men, will definitely require, men to, run this. In fact, there was one academician, Scott Elliott from the US National Academies of Science, Engineering and Mathematics. He, in fact, did a study and survey and believes that, artificial intelligence will take away most jobs, except for about 11% of, the individuals who will have skill sets which artificial intelligence can't reproduce. Having said that, there's also a thought that, and that's what many experts believe, that by the year 2029 or maybe 2045, they say this will be a very significant phase, where artificial intelligence will make significant advances, where, the artificial intelligence will probably begin to exceed human intelligence. Of course, these are all thoughts. If you were to look at it in this way, that what we were doing about, say, 25, 30 years, we used to see these sci-fi movies, we used to look at robots doing things, and, the robots will, do a lot of activities which human beings, do currently. At that point of time, we used to think this is fiction, but today we see this happening in our daily lives. We see, these Alexa devices, we see autopilots, self-driven cars, we see, robots helping out in surgery, in space research and things like this. So, like to answer the question about, the question was, machines replacing men. I still hinge on a yes and no both, no, for reasons, whatever I mentioned.
Okay.
But seeing the way,
I think,
seeing the way, seeing the way artificial intelligence is advancing, I would like to quote what Stephen Hawking had said in 2016, 2 years before his death. He mentioned that artificial intelligence will be either, one of the two, the best or the worst thing, that has possibly happened to humanity. So having said that, I just believe, there's a lot of evolution which will happen in artificial intelligence. I believe it all depends on policymakers and creators. As long as you keep artificial intelligence to help out, to help serve human beings and, the risk management function, they can act as a very good ally. They can actually give us a lot of, I believe, support, and we can do great analysis with it. If not, I don't think, existential crisis only for the CROs in that sense or, certain risk teams. I feel it's an existential crisis then for the entire human race. So with that,
It is a debatable this answer, but still, let us look at it how it goes. Shriram, and now from now onwards, it will be only 1 minute for each of you. Time is not there. Having said that, one of the major challenges which I am foreseeing is the upskilling of the rural class, or how will you educate the rural class on the digitalization part. We are talking about fintech companies, and we had, in the morning also we talked, I had told it as a challenge of upskilling the rural class of people. How will you train them? How will you educate them? Do you foresee this as a risk, or it can be done?
So I do not see this as a challenge in terms of upskilling of the rural class. So I think there's some kind of misunderstanding in the sense that the urban class are open to adopt the technologies faster than the rural class. I don't see that happening. You might see some data points towards that, but eventually in the long run, it will catch up. It's only two things. One is awareness, and one is the confidence that we give that it's safe to use this. So once the awareness and the safety portion, and that's where the regulator, the government, etc., have to play in a role. If this happens, believe you me, in the future, we will see the rural class using digital technologies much more faster, speedier than the urban and the semi-urban areas. Because I spoke of those 4 points, the speed, the coverage, the scale. So all this is available in the rural class, and this is what will happen in future. And not only that, there will be a symbiotic relationship between the government, regulator, financiers, lenders, the entire ecosystem to bring about tools. For instance, like Manish said, over the last 20 years, only one bureau came in the entire credit space. Probably, yes, to extent, I agree with him. Now there's an account aggregator which has come up. I think that can be under such large thing. Once that comes in, it's phenomenal. So all this will penetrate not just the urban India, but will reach out to the rural masses. And I am sure that over a period of time, everyone will benefit from this. Thank you.
Manish, will it be possible as a CRO to avoid any type of risk? If so, which is the one?
See, you will agree to the fact that the business we are in, it is a very crowded and traffic-oriented street. And risk is something where you are one of the victims, either by a mistake of yours or any counterparty risk. So, very difficult to avoid a risk. Yes, we should have tools to better navigate ourselves and maneuver and reach the destination. Now, you would appreciate that in our industry space, there are now too many players on either side, both borrowers, lenders, intermediaries. Incorrect action by any one of us will victimize, and correction steps to any one of them will also benefit others. If you ask me what all the kind of risk in a digital environment, I would put 4 quadrants, and I will not take much of a time to explain. On one quadrant are all the technology-related cybersecurity, data privacy, cloud, and all those risks. Second, I would say all manpower, workforce-related risks. Third is on the automation risk, whatever in process, in product, whatever we do. The last one, which is the smallest pizza pie, but is the most uncommon thing, is the risk of resiliency. Whether I am prepared to handle the negative outcome of any new innovation I attempt to do. I think that is one of the space we all need to do work more on it and to manage. Again, I would repeat, don't make your entity or your processes or your product dependent upon some certain comfort. And what I meant by that, let me give you a very simple example. There are thousands of aspirin tablets available in the market. But each of us have made our body habituated to one particular brand. Unless and until I take that one brand of aspirin, my headache doesn't go wanes away. Please don't make your product, processes, technology, infrastructure dependent upon that one particular aspirin, that if that doesn't work on one particular day, your system crashes down. Work on diversities, work on alternates, Many a times in a technological digital environment, it is a very good way to test and learn and make some small mistakes to figure out which is the right path for me to take. That is, I would say, not an error. It is a cost of business to figure out the right path. Yeah. But to make a statement, I think it is very difficult to avoid the risk. We all need to navigate and maneuver and act as a risk manager and reach our destination. Thank you.
Good one. Sundar, I know your passion for risk education. You have been telling me for quite some time. Tell us something on that, how it can help the digital economy.
So, risk management is not an ivory tower job, right? Credit risk management is also not an ivory tower job. It is not a one-function job. It has to permeate across the entire organization. You know, be the person selling, be the person onboarding, operations, or the customer service person, or the legal person, everybody. If that be the case, why should risk education be focused around the risk department, or the credit risk department, or the credit function? It should permeate everyone. And enterprise risk management education typically does that. And if we look, imagine if we were to have a frontline person in either sales or ops be looking at their process with a risk lens. And if we were to do education on those lines, you know, it's the need of the hour. So IRM India has a 5-level certification program. You know, level 1 is typically for anybody and everybody, even a salesperson, even a legal person, even a finance person, even a customer service executive. You know, you look at your process with a risk lens, you restate your SOP with a risk lens, and then you stick to your SOP. And then, you know, if first line takes care of bulk of the job, then, you know, CRO looks at strategic risks.
Let us conclude on this future CRO with a hope that CRO will continue and evolve with the changing environment. In simple words, I will say that and finish off. Thank you.
Thank you so much, honorable panel members, and thank you so much, honorable moderator. Ladies and gentlemen, in the interest of the time, we can take one quick question from the floor. So, yeah, we have a question here. Kindly do introduce yourself and the organization, and the question to which panel member?
Hi, good afternoon. My name is Prasoon. I am from Writer Information. My question is to Sundar Natarajan. You made a comment that in current times, contemporary times, risk is on the front line. If you could elaborate that with you know, some examples, that's one. First question. The second question is, since you come from India...
Sorry, I didn't get that. Risk is?
Risk is moving to the front line in your... Yeah. That is the first question. The second question is, in your view, what are the contemporary risk models which you have, you know, observed being implemented in the bank assurance model of insurance sourcing?
Okay, let me answer in the order of the questions. Let's assume a salesperson is looking at selling a loan or a life insurance policy. Let's say to and the Aadhaar card says it's a 55-year-old person. And visibly the person is looking like an 80-year-old person. You know, frontline underwriting is the need of the hour. You know, and not now. It's always been. So it's probably already there. You know, in spirit, it's already there. It's not called out. And it's not, you know, my colleague mentioned awareness as a big, you know, enabler. It has to be called out. And when the salesperson looks at, you know, his job with a risk lens, then the organization benefits. I'll give one more example. Let's say a customer service person gets a call, okay, inbound call. And the person is asking for some mundane query. But, you know, technology-enabled screen tells us that the next EMI is due in the next 3 days. And the person doesn't call it out, or doesn't, you know, offer another mode of payment, or doesn't offer, let's say, an e-natch attachment. Is not doing his job and is not looking at it with the risk lens. And while our SOP may get them to do so. If it is not so, then the organization loses out. Then, the impact of that would be in the day-end report, month-end report, and in the risk register and the RCSA and all of that. By the time, or if risk misses it, the third line of defense catches it, it will be too late. It has to be addressed at the first line. And the more we systemize it, the more we bring risk to the front line, the better for the organization. As to your question on have any risk models been incorporated in the bank assurance model, in a focused, concentrated fashion, and with it being called out, very few. For it to be one would need to look at either a COSO framework or a 31,000 framework and get the process streamlined and certified. It's not a big deal, but I would say very, very few.
Thank you so much. And now, ladies and gentlemen, I would like to call on stage Mr. Suman Singh, founder and CEO from Cyborg Intel, to kindly do the honors of felicitating this wonderful panel. Suman, thank you so much for doing the honors. Mr. Sebastian Fernandez first. Mr. Sebastian Fernandez, CRO, HDFC, Credilla. Big round of applause, ladies and gentlemen, to Mr. Fernandez for his wonderful contribution in the panel session. We move on to Mr. Shriram Jagadeswaran, Chief Credit Officer from Shriram Housing Finance. A big round of applause, ladies and gentlemen, for Mr. Shriram Jagadeswaran from Shriram Housing Finance for his wonderful contribution to the panel session. We now move on to Mr. Manish Odeka, CRO from Hiranandani Financial Services. Thank you to Mr. Odeka for his wonderful contribution in the panel session. Mr. Ashwini Kumar, CRO from Tata Cleantech Capital. A big thank you to Mr. Kumar for his wonderful contribution in the panel session. Mr. Sundar Natarajan, CF IRM Deputy Chair West Region from IRM India affiliate. A big round of applause to Sundarji for his wonderful contribution in the panel session. And our honorable panel moderator, Mr. Srinivasaraghavan, CRO from Arman Financial Services. A big round of applause to the moderator for his wonderful contribution of the panel session and moderating the panel. Would request Suman if you could join the panel members, and panel members if you could kindly come forward for a group photograph with Suman. So ladies and gentlemen, a big round of applause. That was the final panel session of the day, and what a wonderful panel we had. The future CRO, how to succeed in tomorrow's economy.